What is up, everybody? We are back with another episode of Bullish Top Stocks to Watch for the weekend. Why? I think this is episode 44 for me, I want to say. So I think I've been doing this for about a year already. So that's pretty interesting there. But anyways, a couple things before we get into it. As always, hey, these are only my opinions. Do your own due diligence. I'm not a financial planner or advisor, just kind of showing what I'm watching, maybe also what I'm playing. I just find it very helpful for me to kind of start the week with a lot of prepared information in terms of what I want to watch or play for this week and coming into the next week, right? Some of these I'm playing over multiple weeks as we go into one of them right now to start off. But anyways, I want to actually give what I'm watching, but why I'm watching it, right? If you agree, great. If you disagree, great as well. We can start a conversation or a dialogue about it. I really enjoy talking about this with other people, especially people that don't necessarily have the same viewpoints or have a deeper or a different perspective than I do. So yeah, just definitely drop some comments. But also, hey, give us a sub here on YouTube. Give us a like. Help me feel good about myself. Also, real_bullish, wherever you get your social media poison, basically Instagram, Twitter, stock Twitch are all places that I'm pretty active on. So really appreciate that. Realbullish.com. Go sign up for our newsletter. Also, there's a link probably below here in the show notes, but also on the site as well. Get a shirt. I don't have it on right now, but help brother out a little bit. Appreciate that. But anyways, I'm going to jump into it. It's going to be an interesting week. It's going to be a short week. I want to say that the markets are actually closed on Friday and Thursday. This week is going to wind down. I think for the next 2 weeks, it's going to be interesting because usually you have what they call a Santa Claus rally. I don't know if we'll get that this year specifically because we do have a little bit of hawkish or bearish sentiment against the market right now. We have the FOMC meeting basically that happened, I want to say Wednesday of this past week, and basically Jay Powell came out and said, hey, they're going to speed up the tapering and probably interest rates to follow. I want to say it was kind of 3 interest rate hikes planned for the next 2 years and another couple that are slated the year after that, right? So that's the next 3 years. We're probably going to have interest rates going up. Not the worst thing in the world, right? But at the same time, it's going to be a different market, I want to say, right? Maybe not all right now, but it's going to be interesting how I want to play this. And I'm kind of positioning what I'm watching and what I'm playing now with the understanding that, hey, inflation's here to stay for at least for right now. Things aren't going to get cheaper necessarily. Maybe in the long run they will, but that's exactly why Jay Powell and the FOMC meeting is coming out more hawkish or bearish, because they are seeing inflation not being transitory, being more permanent, and they're trying to make it not as entrenched. At least that's what they say. Are they behind the curve? Yes. But at the same time, it's a hard thing to do. Like I said, Santa Claus rally. Maybe we'll see what happens this specific week. But anyways, I'm going to jump into kind of what I'm watching this week. The first one I'm going to jump into is Alcoa, ticker symbol AA. Basically, they have a really interesting catalyst that's coming up on Monday. And I've been a fan of Alcoa. Basically, I've called out episode 41. 40, 38, 37. So I've been calling it out for a couple months now. So go to those 41, 40, 38, 37 episodes to kind of get overall what my bull thesis is. I'm not going to go into those specifically, but just know that I have a reason why I've been watching this for a long time. And I was waiting for exactly a time like this. I got kind of lucky also, like I said, on 12/20. So this coming up Monday, they're going to be included in the S&P midcap 400, right? So what that means is they're going to get included. They're actually replacing this company called Baxter International. Never heard of them, but anyways, so that's good news for Alcoa, bad news for Baxter. Basically, Baxter's coming out. Alcoa is going into the S&P midcap 400, and what that means generally is that other indexes, or sorry, ETFs that mirror the S&P midcap index got to start buying Alcoa. I don't know if they can do it before, but they have to start doing it like within a time frame after they get included. Good news for Alcoa, but some people also say it's kind of like washout news, because if they were in other indexes, they'll have to sell those because they're not in those anymore, and then buy them now with the S&P midcap. Overall, you kind of do see a pop coming up. Anyways, also another interesting one for me. I've been watching this for a while. And Alcoa's aluminum play. So in the aluminum industry sector, basically, they're number one. They're number one on the seeking alpha rating, the quant rating, right? Which for me, I'm always looking for companies that are in the top 5 of the seeking alpha quant rating for their industry. Alcoa is actually number 1, right? And the reason why I'm looking at these types of companies again, and I've been looking at for a couple months now, more in the industrial healthcare sphere, is because in inflationary environments, so when things are costing more, the safer play in terms of kind of not just what I'm seeing, but what I'm researching is kind of playing those industrials, commodities, banks, real estate, healthcare, places, or putting your money in places that are a little bit more resistant to inflation, that can pass those end prices onto the consumer and have some, they call it pricing power, right? Purchasing, but also pricing power, that they can kind of say, okay, things are costing us more. We can kind of push those costs off to the customer. Unfortunately that we're the customer, but if you're playing that inflation hedge, that's what I'm looking at. But also two things. So I'm looking at sectors that do well in inflation, like I said, industrials, commodities, banks, real estate, healthcare, just to name a few. But I'm also looking at companies that have a low price to earning ratio. And I think we're seeing that's kind of like the downside catalyst for companies like in high growth right now, right? If you're in growth for the last part of this year, you're kind of getting fucked right now, But also those companies have a super high price to earning ratio because you're betting on future earnings. But with inflation, you care about earnings now, money now versus money in the future, because your money in the future could potentially be worth less. So, anyways, low PE companies. So the average price to earning ratio for the S&P is 21. Alcoa actually has a forward price to earning ratio of 8.73. So like Alcoa still fits the bill of what I'm really looking for. I am going to go looking at the charts real quick. Like I've said, Alcoa definitely got some love over the past month or so, but still in a bearish pattern. You know how I like to do month, week, day. For Alcoa specifically, hey, you see a lot of interesting stuff here. You see the strong green candle at the month level after it kind of broke, and that's what I was kind of waiting for to break of this downtrend here, right? It's been consolidating for maybe 3 or 4 months, and then now you see a breakout on the month level. You see, we're basically 19 days into the month, and you already have all volume over average for this one right here. RSI is a little bit peaked, right? You see 70 and 30 are two areas of correction possibly. So if things are like usually at 30, you're looking for a correction to the upside. Things at 70 or above, you're looking for a correction to the downside. Not necessarily it's going to happen, but those are areas of possible correction. So that's something to be think about here at the month level. But MACD is not even close to being bearish. So that's a good sign there. At the week level, like I said, month, week, day, I like to look at different time frames. This is interesting to me because if you see this moving average convergence divergence here, you see there's been no green kind of candle here basically since the week of 1025, and now you're starting to see that blue line go over the yellow line. That's exactly what you want to see right here. It's not there yet, but if you look at when they're going to about to converge, it looks like it's going to be imminent. Maybe in the next week and a half, 2 weeks into next year. You see RSI picking up, right? It kind of turned around at that 51 level to the upside, going to kind of retest the 70 area. Interesting though, like this volume over average at the week level, you haven't had volume over average in the past 52 weeks. You haven't seen this much volume in Alcoa. Like I'm saying, that's that kind of S&P news, right? That here, and you see a strong green candle. It was playing in this area, and this is exactly what I've been watching, this 45, 46 area. I've basically just been purchasing it over the past, I don't know how many weeks, as I've been watching it to kind of keep on playing that. We finally see a strong green candle to the upside. Now it's interesting to me because if it can hold this area of 49, so 50 area, if it can hold this 50 area, I can see this being a long time hold if you're bullish on basically industrials and basically the number one aluminum industrial, because you still have that infrastructure bill. And that's kind of why I was playing Alcoa originally, for the infrastructure bill. And I was looking into research into it. This was the play that I was going to go for. It definitely paid off here. What I am seeing though is it gapped up, right? So basically this was that news, I want to say, of inclusion into the mid cap. People are getting bearish on it, or bullish on it. But what I want to see now, even though I probably won't get it, is a retest of this like 50 area, right? But you see another strong green candle here. We'll probably see some interesting resistance here at the 59 area level. So I want to see what it does at this next level. If there's selling pressure, cover your kind of profits and get out. But anyways, it did break over this interesting area here at 50. Well, I want to see a retest of this area. We'll see if we'll get it on Monday, because like I said, Monday they're getting included. But still, if you're going to be bullish on them long term, it's an interesting area here for that breakout. The next one, I'm going to go into CVS, and I want to I don't know if I mentioned CVS already, but this is one that I've been watching for a while. I think I did mention CVS actually. Maybe a couple, I think it was episode 43. I mentioned CVS. I called it out. So go back to that one for my original bull thesis on it. But basically what I was watching for it was a 12-9. On 12-9, they had Investor Day. And basically what I was looking at for CVS is an interesting pivot from being the place you go to for your fucking coffee or your beer or your fucking gum or cigarettes. Now they want to shift to be basically what they started off to be, a health and care experience. And why that's important to me is because health and care, like I said, in the high inflationary environments, health and care are really interesting plays for that, because those are prices that you can pass on to the consumer or the whoever's kind of paying that medical bill, right? I like CVS for a few reasons. I watched the Investor Day. I think it's 4.5 hours. I honestly only watched maybe like I only absorbed maybe an hour and a half of it, but in that time there was so much information that I did not know about CVS. So go watch that Investor Day to really get into some interesting information. I'll pull a couple pieces here. 85% of Americans live within 10 miles of CVS, and they're the top 3 health sites in the United States. So get that. 85% of Americans live within 10 miles. And also, so that's their physical presence, their physical footprint. Now, their internet presence, their digital footprint, they're the top 3 health site in the United States already. Before even pivoting into health and care experience being the primary driver, that's what they are, right? They already have that physical and digital real estate, right? So it also in that investor is a virtual investor day. They raised their 2021 expected guidance, right? Their revenue, EPS, operating cash flow, and they also gave guidance for 2022 that was pretty good. Basically, overall, it was above what it is today for all of those, except for operating cash flow is down slightly, but that's to be expected as they expand their environment to be, what they are now to what they're going to be into the future, right? I think that's interesting. Also, they expanded the dividend by 10%. They have a to $2.20 over a year. I think they pay out quarterly. So basically, they expand their dividend by 10%, and they announced a $10 billion buyback. I love buybacks for a few reasons because it shows that the company thinks it's too cheap right now, so it's going to go rebuy those purchases, and that has a positive effect to the EPS because your denominator is less, so your EPS organically goes up more. If everything remains the same, buying your shares back makes your earnings per share higher, right? So I like those things going into it. So basically they're going like CVS. They're not pulling their punches. I'm in health and care. I'm full disclosure, I work for a health and care company right now. I've done it for the past 2 companies I work for. So I understand what the system is now. The system's broken, right? And I think that people that work in the health and care industry know that it's broken. And that's exactly what CVS is going after. They're basically going after the current system and how fragmented and complicated and expensive it is, right? Healthcare is fucking expensive, especially in the United States. CVS is going to combat that, right? They actually called out a shift. And this is interesting to me because, and this is a little nerdy, they're shifting to a risk-based primary care model versus a traditional fee for service. So they're taking on the risk as the CVS company itself, which is interesting to me because that's something that's barely getting talked about in these companies that are trying to disrupt the health and care industry. And CVS is going after it, right? And like I said, they already have the digital footprint. So they want to be disruptive and they have the footprint and the capability to be disruptive, which is interesting to me. On 12/14, also a couple things I was finding when I was going through it again. On 12/14, Goldman Sachs called them out as a buy and gave them $121 price target. With price target increases, you gotta, with a grain of salt. But when you have the big ones like Goldman Sachs coming out bullish on a company or bearish on a company and giving you a reason, those are all interesting things to me, right? So anyways, like I said, month week day, what I do find out for CVS, and I think I called this out before, is it's an interesting double top here at the month level, but previously, but right now at the month level, hey, you have RSI going up. You can argue that it's a little bit overbought right now because you do see 70 being an area of possible correction, but if you look at CVS, it can run 86, right? It's all relative to the company, right? So even though 70 is an area of possible correction, CVS at the month level can run to 86 and not blink an eye before it has to sell off. And you did see that happening here, right? It ran all the way 86. You see a topping here on RSI and MACD crossing over. The price kind of followed suit, right? So at the month level, still a lot to love because even though it's at 70, it does have about 11 RSI can go before it really has to try to cool off because it's done that before. I love that MACD is still bullish as shit. And you see a really interesting green candle here coming to a possible area of resistance here at this kind of like 104 area. And that's because it's been an area of significance before here, right? At the week level, just dumping into a little bit. So I think that for me, what I'm hesitant about with CVS, it kind of jumped too fast, right? I called it out, a week and 3 weeks ago, right? And since that time, it's basically just taken off, right? So if you're coming in at this point, I would wait for a retest of this channel. If you look at connecting these highs, you do see an upward channel here. I want to see a retest of this channel to the downside to get into it if I was fresh into it, right? But it's still something to watch, I think, because if it can fall a little bit lower, I think it's going to be, or sustain and break this new area of resistance is going to be really interesting, right? Over the past 2 weeks, 3 weeks, basically, you do see volume over average. 2 of the past 3 weeks have been bullish volume over average. So that's always good. You see RSI, like I said, at this 70 area. So I think right now it's a hot runner. I want to see it cool off a little bit, but when it does, I think it's going to be a really interesting area, not to hold for the next year, 2 years, but 3 or 4 years. I think we're going to come back and say that, wow, this company's at a value right now for sure, right? Let's see. Go jump into the day level, right? And this is kind of what I want to see, right? And this is exactly what I wanted to see is the day, like, because it just pops so fast, it has to cool off a little bit. But as long as it can stay over this breakout area, so let's call it this, let's say 98 area, I love it. Actually, I even love it if it holds this 100 area, if it retests this 100, find some support because it's all mental, kind of these areas of support and resistance. So those whole numbers, 100. 100, 200, 300, 400 are really important areas. If it can hold these, that's a lot of support at that level. I want to see it cool off. The charts tell me it's going to cool off a little bit. You do see some selling coming in over average on Friday, right? You see RSI cooling off, MACD cooling off. It could be people taking profits because it ran since I called it out, it's ran basically pretty hard, right? And I want to see it correct a little bit, but I think CVS for the long haul, it's an easy hold for me if it does hold these other areas of support and resistance. I'm trying to do this in 20 minutes or less, so I'm trying to talk a little bit slow, but also kind of get through what I have to get through. The next one I want to talk about in that health and care vein is XLV. This is an ETF. It's basically the Spider Health and Care Select ETF. They have an ex dividend date of 12/20. So if you're not in it now, you're not going to get the dividend because you have to be how ex dividends work. You have to be in there before that ex dividend date. In this case, it's 12/20 to get that dividend. So it's too late to get it now, but that can be an interesting catalyst to the downside that I would use to kind of test XLV for the future. Like I said, I'm looking for these pricing power companies. XLV is basically and really good. When I looked up ETFs in the health and care perspective, this one stood out to me for a few reasons, right? Like I said, I can see some short-term selling pressure going into it, but if it finds support at some interesting levels, which I'll show, I would be happy with that, right? But anyways, when I looked into XLV, the top 5 holdings, so 33% of the total holdings of the company are United Health, Johnson & Johnson, Pfizer, Life Science, and Abbott. A lot of different ways to play it there. That's the top 5 holdings in order. You have, a healthcare provider. You have 2 vaccine companies there. You have, a life science. You have Abbott, which are 2 different other things like support and clinical sciences, right? What I love about this one, though, like I said, I'm looking for companies in those industries that can transcend inflation better, but also have a great price to earning ratio. So there's value there. The average price to earning ratio in the XLV is 22.5. Oh, sorry, 22. Yeah, 22.5 is the average price to earning ratio in those top 5 holdings, right? Compared to 21 price to earning ratio of the S&P. So still really good value there, even though it is a little bit over the standard price to earning ratio. It's not. I'm looking for companies under 30. Over 30, I really have to have a reason to get into it for their price to earning ratio. If they're doing price to sales, whoa, that's crazy right now. But also these companies, even though they're moderately valued, they have double-digit revenue growth year over year, which I love, right? So I like XLV in terms of what they're holding, and that's what I look at for ETFs. The chart could look right, but I want an ETF that is in the industry I wanted to do, that stays in their lane and does what they want to do, but has really good fundamentals. And that's what we're seeing here. Interesting level though here at the month level, month, week, day, right? At the month, you see a strong green candle coming out, which I love. I really love this chart. I love the fundamentals of this ETF, but I also like their charts, right? And I think that I'm overall bullish on this one for sure. You do see RSI coming at the month level to this possible area of correction or a significance of 70, right? MACD is kind of floating, but what I love about the month level is it's not too far extended for this 10 EMA, but if you get a little bit closer, you can see it better. It popped over this area of previous resistance. There was basically basically a month where it kind of was bumping up against this area. Let's call it the 136, 137 area, and it's finally crossed over that. So for me, if it can test this area, stay here, use it for the next leg up of growth, right? You do see RSI, boom. You see hey, a double bottom for RSI. RSI is popping up. MACD is just about to cross over at the week level to be bullish. It hasn't been bullish basically since 9/6, right? So for the past 3 months. For the past over 3 months, it's been in a bearish pattern, and you see that price couldn't break out. Now it's turning bullish. Now I love it. I want to see what happens after 12/20 because basically what I've done before also is at that ex dividend date, sell it because I got my dividend payment. So I think that other people might are going to follow suit with that. So I want to say this next week we might see some interesting fluctuation for the price to the downside. I'm gonna use that as probably a reason. I probably will get into this to be totally honest with you, because I do like at the week level we're right about to cross over to be bullish. RSI's picking up for the past 2 weeks. We've had volume over average. And also, hey, if it can stay over this, like I said, this breakout area, I love it. At the day level, kind of more of the same. And this is exactly what I want to see, right? You do see volume over average, but you see the price coming down. And as long as it can stay over this 136.84 area, I love it. So I would probably buy closer to this with the plan to get out. And those are my areas I was looking at. Basically, I'm looking at the area, the 137, right? If you can keep 137, I'm happy. I would even chase it, maybe not chase it all the way down, but see if it, like, let's say I was wrong about this 137 area and it busted it, right? Which I did with Alcoa. I was like, okay, my first stop loss was wrong. Do I still love the company? I do. Okay, what's my next stop loss? The next plan was my 134 area. Let's say for this one, okay, if it can hold this, I feel comfortable buying here. Worst case, I'm gonna have to. It's an investment now. I'm gonna be in for multiple years. But basically, I have a couple areas of stop loss that I could play with it. Also, for here, you have bottom channel support. That's going to be a little bit more shaky, but interesting enough. Like I said, I would love this at the 137 area, come down a little bit. If it came down to 134, I'd still be bullish on it. I'd probably load up a little bit more there. That's just how I would play this specifically myself. And a couple more. I'm just going to round out real quick. I won't go too far into it, but I want to show them. I've called out the SPY basically, I don't know, for the past 2 months. If you're going into the SPY, which I'm interested in, like this 453 area is what I've called out before. It's found for the past few sell-off days that are really hard, though. This is when it really shook out. It found support at this 453 area. So if it holds that, I love it. If it breaks that, whoa, you're gonna have a overall an interesting market correction coming up for that, because that those are areas of support that it's been showing. But anyways, I love to go to the SPY and think about it. All the Qs, there's SPYs, the DIA. If I'm going into those, I go them over slowly over a longer time horizon. I'm not just blowing my load and just popping my full share, market size, or position size right now. I'm doing it slowly over a longer time horizon, because then to me I feel like I'm investing in the long term or longevity of the market, barring even with the correction to the downside of 100% or whatever. I'm still feel like I'm betting on, or investing, or betting, however we look on it, on the long term bullishness of the economy in general. So that's kind of why I love this correction that we're having right now, because when it starts dropping more and more, I just buy a little bit more SPY. I'm basically, I don't know, like 80% cash right now. So I'm being very opportunistic with my buys. But when I do buy, I'm buying for the longer time horizon versus the shorter that I've been playing before. But speaking of a shorter time horizon, but also possibly a longer one, MU, and I'm gonna call this one out hopefully in 2 minutes or less. MU, they have earnings on 12/20, right? And the reason why I haven't been playing earnings as much, because the market hasn't been like, it's basically buy the rip, sell the dip. Buy the dip, sell the rip is basically what it's been doing right now, the market, right? So these earnings, when they pop, they're not holding. At least the ones that I'm looking at, they're popping, they're not holding. So I haven't been playing earnings as much. But MU is an interesting one. Like I said, they have 12/20 earnings over the last 20 quarters. They have meet or beat EPS 100% of the time, and 85% of the time on revenue over the past 20 quarters, right? So I love having those numbers at my back. But also, I will say it doesn't, looking over the past 6 earnings, they've only went up 33% of the time the day after earnings, right? So let me put this in perspective. They meet or exceed. I'm sure they're going to meet or exceed revenue and EPS expectations this coming up earnings, right? I don't know if they're going to raise after earnings, but I think it's in an interesting area right here that I feel comfortable taking a shot. Because of the EPS increase estimate. It's 197%. So looking over quarter, so same quarter year over year. So looking at this quarter last year, the expected EPS estimate is 197% over what it was last year, right? And they're also 21% under the average analyst price target for Yahoo Finance, right? So there's meat on the bones there. They're not too expensive. They have an estimated increase that's basically in the triple digits, And you can bet that they're going to meet or exceed expectations for EPS and revenue. But all that being said, it still doesn't say that it's going to raise after earnings. But I like it here, right? If it can hold this, 81, 82 area, I'm loving it, right? You do see RSI kind of floundering, going down. MACD's going down. It's kind of been range bound basically since the week of 11-18. It's kind of been caught in this range here. But if it can stay here, I would love it at this 82 area, right? I'm kind of buy right here for a shot to the upside with the understanding that it might lose. It might beat everything coming over and still not raise after earnings. That's the kind of chance you're willing to take. But for MU, I think it's an interesting play there. Anyways, those are the ones I'm looking at this week. That was Alcoa, CVS, XLV. I really like XLV, SPY, and MU. Everyone have a great week. Happy holidays and good luck. Peace.